Figures from the World Gold Council show that investment demand for gold soared 127% in the 6 months to the end of June compared with the same period in 2015. That's thanks to a potent combination of Brexit, the US election and negative interest rates, and plenty more as well, which I'm sure Phil Carr will tell us all about from the Gold and Silver Club. Lots feeding into this. I just mentioned a few of them there. Can you just rattle off all of the reasons why gold is soaring?
One of those being Brexit, where we saw off the back of that, gold rallied 1,000 points. So with that, we have continued to see gold break out to 2-year highs. We recently, last week, we saw the Bank of England US interest rate reduced from 0.5% down to 0.25% was another catalyst for gold to break out. You're absolutely right. Investors have really driven this market so far this year in 2016. Interesting, a lot of that investment demand has come from the West and also the Middle East, whereas typically we see the strongest demand normally comes from India and China, the top importers in the world. So with India and China not really fully on board just yet, we've got a lot more upside potential for gold in the months to come.
September, October is the time that India buys their gold,
correct,
isn't it?
and we transition into that period over the month of August. So what you often see is the start of the wedding season in Asia. Gold jewellery is bought a lot more, especially in India. As we transition into August, September and October, that is where we often see a lot more demand for the gold market. Imports increase. So we're expecting a lot more upside here for gold. Now, the Gold Council, the figures which have come out, they're not a surprise to us. We've continued to see every pullback on gold this year be really shallow. In fact, the last time we spoke, gold was trading at 1,300 US dollars, which was just over 2 months ago. We suggested at that point it wasn't a great idea to buy gold, that there was a correction coming. And we did have that correction. Gold came down to 1,250, gifted a lot of investors an opportunity to add to a position. We had Brexit, the price skyrocketed, we saw huge inflows after that. And since then, gold has just continued to hold its current levels, around above 1,300 US dollars per ounce, currently trading at 1,350.
Silver is up, what, 45% this year, best performing commodity.
Yeah, that's it, yeah.
What a story for silver. Is it the same? Is now the time? Because, OK, now's the time for gold. Have we missed the boat for silver, though?
Silver actually is at a great time to add a position. So if we look at what happened in the financial crisis, 2008, 2009, which was the last time we saw inflows as strong as they are at the moment, silver rallied from 2008 to 2009, over 2.5 years, 480%. This year, we've officially entered into a bull market with silver. Silver is up 45% this year, as you say. So the upside potential is massive. And right now, there's a lot of fundamentals supporting the silver price, a lot of demand from investors. Technically, it's looking good at the moment. We've just been sitting around 20 US dollars per ounce over the course of this week. It's been consolidating, which is typical over July coming into August. But now it is poised for its next leg higher. So if you have missed the boat so far this year on gold and silver, you've been gifted with an opportunity to get in at these levels. This is the second chance to get in for the next leg higher. I've got a lot of confidence that next time we speak, gold and silver will have gone significantly higher than they are right now. So now is the optimum time. So the ship's gone, but get in a paddle boat and catch it up, basically. Absolutely, yes. Yeah. All right, now is the time. Thank you very much indeed. That's what Phil Carr says right here from the Gold and Silver Club.